So cool. I think this is working. Good job, Snow. Baby, I like it. What's up, Louie? What's up, Louie? Is our live up? Is it working? Well, is it working? I think it's working. I think we're live. We are live. Beautiful, beautiful. Louie, are you paying attention to me on the screen or what? Is that me? I think that's me. I think you're talking. I think you see it. Let's perfect. All right, I think we got everything up. We're rocking and rolling. So let's talk investing. So the goal today is to talk about what's going on in the market. See what we see. Go from there. See how that goes. So today we'll check out some different stonks. See what's going on. Nvidia shines after 5 trillion value after a flurry of moves at GTC. So let's take a look at it. So Nvidia right now is up to 206 after market. That's absolutely wild when you think about it. Because not that long ago, it was in like the low 100s. 6 months ago? Yeah, it's like 100. So for those that invested in this 6 months ago, you've doubled your monies. Put it to the moon. That's actually crazy. If I bring this up here a little so you can see the graph, look at how Nvidia has just continued to go to the moon. What's interesting is their PE ratio was in check for the longest time. It's now up to 57. That's pushing into needs to start performing territory or it's going to plummet kind of thing. So it's kind of cool to see what they call Mag 7. So this is one of the Mag 7 stocks, which is Nvidia. Let's take a look at their financials. Where's their financials? It's not statistics, is it? No. There it is. All right, I found it. All right. Let's take a look at what they got to tell us. Maybe if I zoom it out a little bit. So, Yahoo Finance has got a fun little AI blip on what's going on. It's talking about their PE ratio increasing to close to 50x, which they were running around 35, and that's where I was talking. Nvidia is taking off, and when the PE ratio starts getting well above 35-ish, like this one's at 48, they're going to have to start performing or it's going to cause pain points in the market. So hopefully Nvidia figures out their stuff and continues to grow like the beasts they are. If you go back a couple of years, their PE ratio was out of control, and they have found ways to get their revenue to match the expectations. So that's pretty cool. And let's look at their quarterly financials. So they're still hiking up. If you see the last couple quarters, 40 billion top line, 44, 46. Their gross profit is ridiculous. So the cost of revenue does not scale at the same rate as their top line. And so Nvidia, one of the reasons why they continue to be just a shock and awe is if they grow their top line, their margins are ridiculous. Which is why investors love Nvidia. So if they come up with some cool new things, they're just going to keep pushing into new all-time highs. If I keep scrolling down here on their financials, expenses have remained in check. Their normalized EBITDA, 25, 22, 31, trailing 12, so TTM, trailing 12 months, is sitting at 103. So it's crazy to think NVIDIA is now making over $100 billion a year. It's absolutely wild to think about. What I want to talk about or take a look at is Intel Corp. I haven't spent much time looking at Intel, but they have been on an absolute terror. So if I look at the last month, actually I'm going to go 6 months back, they were sitting for the longest time in like the low 20s, and they have basically pushed up into the low 40s. And so thinking about what is driving this, right now their P ratio is at 1,384. They are just not making money right now. So what this hype train is with Intel, I don't know. Let's see what Yahoo Finance AI is to say. So they're poised for a turnaround under the new CEO. Analysts have highlighted the company focus on rebuilding and adapting to the AI-driven market. Oh, nice. We love buzzwords. Buzzwords like AI. But it's competition in the semiconductor space from firms like NVIDIA and Qualcomm impact market dynamics. So that's where the AMDs of the world, the Intels of the world, if NVIDIA or Qualcomm continue to push on the sector, they take market share. You know, could there be, I don't know what this hype's about. I don't know if their last quarterly earnings, let's see what their last quarterly earnings was. It says, it's always this little blue dot. What did they do? Why can't I see it? Can I do the last month? There we go. Now I can highlight it. So the earnings per share came in at 23 pennies, which was better than break even. And their last earning per share was just under. It was a loss. So they must be turning profits around, and it's exciting people. That's what it looks like for Intel Corp. If you've got a stock in the chat and you want me to take a look at, see what's going on, let me know. Otherwise, I'm just going to keep rambling on random stuff and see where we go. Everyone loves to invest. I personally invest a lot. It's one of my favorite things to do. So if you've got something you want me to take a look at, drop it in the comments. If you're having fun, smash the like button, hit the subscribe button. Late night stock talk is fun. It's fun. It's for everyone. It makes us all better. All right, let's go back and take a look at one thing I'm curious to see is I've been hearing from people that like Costco is that industry is at a peak. And Costco right now on the day is relatively flat. If we were to go 6 months back, they're down more than 10%. Holy moly. Look at this graph. They were well over 1,000 6 months ago, and they just keep plummeting. You're seeing a shift of people pulling dollars out of areas like Amazon, Costco, the safe havens, and putting them into tech, NVIDIA, Palantir, Microsoft, things that the AI hype is around. People are riding that train like crazy right now. One other stat I just want to show you guys that people are like, is this a big bubble right now? Something I think that's important to discuss is the M2. One thing I want to show you guys is how much money is actually sitting out there right now in the money supply chain. So like what we used to think is like the old norm versus today. Where is this thing? Just trying to find something quick here. Basically what I want to show you is this it? Here we go. Okay. So I'm going to put this onto this guy here. So what this is illustrating is, if I just move this a little bit to the left, there we go. Now you can see it. So what this is illustrating here is when you think of the money market supply or money market funds. So when people have things kind of sitting in stagnant, if I look at just the last 5 years, so post-COVID, what was a normality was sitting around 5 trillion, sitting in money market funds. And what I find interesting is over the last 2 years, there has been a massive push in money markets. Now, does that mean they're pulling out of CDs and leaving it in money markets now? Because you could get CDs at 5-6+%. Is it because they are they're getting out of bonds? There's a lot of reasons, but the reason why this number is important and why I want to showcase this is if people really wanted to pull money out and get involved right now, like they could be pulling out of Bitcoin, they could be pulling out of bonds, CDs, and instead of maybe putting things in the market, they're just sitting on money market funds getting their 3.5% back. If I look on the 10-year chart, back in 2016, it stayed stable at like 3 trillion for a while. And then when the money printer took off during COVID, you'll notice the fear factor pushed up how much money was actually sitting in money markets. Basically, it means people pulling dollars out of the market or anything they're investing in. And then post-COVID, post the first wave, you'll notice it starts to go down because people start investing. Well, one thing I haven't seen yet with all of the extra money that sits out there in the money market funds is post-COVID it dipped. We're not seeing that dip up here yet, which means in the current market structure, this could go absolutely bonkers if we start seeing people using this to come into the market. As it continues to climb, it's a good indicator that people are taking profits and putting them into safe havens, because it's gone from 5 trillion to 7.5 trillion when you're thinking of the end of 2022 to where we're at today. So people are worried about numerous different reasons they're not keeping it in the market. So if I look at over time, 2021, you'll notice watch this. 2003, when people started feeling comfortable about the market, look at this thing. Plummet, plummet, plummet. People are taking their funds out of these, sorry, you can't see the year. They're taking money out after the 2001 crash. It took a couple years, and then they started taking their profits, and as things were getting nerve-wracking for around the 2008 crash, people started hoarding cash again, right? And then after the market crash, watch what happens. Plummet, right? Now let's go back up here. 2000, plummet. And then now look where we're doing. So where's this cash coming from? I wish I knew. Is it bonds? Is it people taking profits out of the market? Is it people just putting in savings accounts? I don't know. But if we have one of these drops here, there's trillions of dollars that could be dumped into the market. So it's one thing I'm thinking about, especially when people look at, say, the S&P 500. Let's just take a look at that. I'll just look at VU. VU is the S&P 500, the Vanguard index fund. So right now, this, if I look at like the 1 year, on just the 1 year alone, we are up 20% on the 1 year. So anyone that's been investing in the S&P 500 has just been getting beautiful returns over the last year. Especially if you start investing in the April time period when the tariff stuff was coming out and it sent shockwaves through the market. You had a lot of opportunity to come in here and jump all over this. I know I did, and it's paid just freakish amounts. It's crazy. It's just absolutely crazy. But if you look at the 5 year, so post-COVID, there was the hype train, and then realistically, since 2021 forward, like it's been basically nothing. And the growth, it almost went 3 years of nothing. So dollar cost averaging in the S&P from, call it, peaks of 22 forward, it took 3 years for that to kind of take off. And then these last, call it, 2 years has been pretty good. We've had a lot of rate cuts in here, and then there's a lot of positivity around the tax breaks that are in existence. So that's all helped tremendously continue to push this forward. But one thing I thought was interesting, so QQQ, which is the ETF focusing around let's say like the tech sector, because that's mainly what's in here, is if I look at the last month, QQQ has taken off. Like looking at it today, I was absolutely in shock that it's trading nearly 10% higher, not quite 10%, but then I seen numbers earlier. So remember when there was that tariffs conversation like 2 weeks ago? You could see it fall off and then just take off. Pretty crazy. Pretty crazy. So that's pretty interesting to see how much the QQQ has taken off. But with that being said, what does tomorrow and the next 2 weeks hold? I don't know. NVIDIA's taken off to the moon. Let's look at one of the other big tech companies like Microsoft. See how they're doing. So Microsoft right now is at 540. When I think of the last 6 months, I remember selling them, it was mid. So it's like 450 is when I got out of this. Kind of stinks knowing that I gave back 20% profits, but I did get my 20% in a different location, so don't you worry. We didn't shed profits. We didn't give them up. But to see where this is starting to ramp back up, it's like taking off. Like it's almost like trying to break through here. It's pretty crazy. Because, like, is this going to blow the top off? I mean, their PE ratio is at 39 right now. Like, why do people... Oh, is the earnings call today? Microsoft Q1 2026 earnings call today at 5:30 p.m. Okay, so people are getting ready for the hype. The hype price targets at 586 is wild. That's insane. But Microsoft is a beast, and they've got all the goodies. They've got all the goodies. So what else do we have to look at? We looked at NVIDIA a little bit, going cray. Microsoft. Meta. Meta would be a good one to take a look at. So Meta is taking off as well. This is, again, another pain point in March. I sold out. It's probably somewhere in this area when they were in the 6s, I think. Upper 6s. So how much did I miss out here? 10%. Missed out on a little over 10% with Meta by not holding. But again, not too worried about the amount that was lost from my sell-off of the Mag 7s at the end of May. Mid-May, somewhere in there is where I traded those off, and then I'm on a heater right now. Let's see here, what are we up? I think I'm up like 30-40% right now on my portfolio for the last 2 months, 3 months. So I'm absolutely just crushing it. And it's just getting started. So as much as it's painful for me to watch Mag 7 take off on me, I still strongly believe I found what I would call a stock that is probably that's gonna create generational wealth for my family. So that's where I'm at with that. I'll talk more about that as I get closer to start, getting into a position where I'll probably start selling covered calls or get away from it. Because at some point I gotta take those profits to the bank. They're just too big. They're just way too big. What's that whole statement? Pigs go to market, hogs get slaughtered, something like that. And if I just keep trying to go for the swing for the fences, there's a chance you let it all go. Not interested in that. So, anywho, we've been talking for 20 some odd minutes. Had a couple people dip in and jump in and talk. If you've got anything you want me to look at or talk about, let me know. Otherwise, I don't think I'm going to be on much longer here. My kitty cat's getting tired. He's passing out. Sleepy. But I want to do more of these finance live talks at night. I think it's fun to talk through some stocks, see what's going on in the market, biggest changers. Hit that subscribe button if you're new. Smash that like button or click that notification bell so you know when I go live again. But I'll give it here 1 minute. If we got no questions or no chatter, I think we'll call it for the night. And another night's another night. It's like 12:30 here. It's pretty damn late. But what do you think, Louie? You think they want us to be done for the night? I think they do. It's okay, Lou Boo. It's okay, Lou Boo. Boo Boo. Boo Boo. All right. Well, I appreciate you all for coming out tonight. We had quite a few people in here over time, so hopefully you guys learned something.